Bloomberg Audio Studios.
Podcasts, radio, news.
Good morning, I'm Nathan Hager.
And I'm Lisa Mateo.
We begin in Bari, Italy for day 2 of the 3-day G-7 Leaders Summit. Support for Ukraine is a key theme of this gathering. Today, the leaders plan to send another message to Russia. Bloomberg News has learned they'll issue a statement pledging to tighten enforcement of their existing price cap on Russian oil, choke off future Russian energy projects, and cut Moscow's revenues from metals. President Biden's delivered his own show of support for Ukraine. He signed a 10-year bilateral security agreement with President Vladimir Zelensky.
A lasting peace for Ukraine must be underwritten by Ukraine's own ability to defend itself now and to deter future aggression anytime in the future.
The president says the U.S. and its allies will be with Ukraine, quote, until they prevail in this war. At the same time, he says he's standing by his decision not to send U.S. troops into Ukraine or to allow U.S. weapons to strike farther into Russian territory.
Meanwhile, Nathan, President Biden may be ready to take executive action to protect more undocumented migrants in this country. We get the details from Bloomberg's Steve Potusk in Washington.
Bloomberg News has learned Biden is planning an executive action as soon as next week that would protect certain undocumented immigrants from deportation. Sources say the new measure would allow spouses of U.S. citizens who lack legal status to remain in the country and seek authorization to work. Some who receive relief could eventually gain a path to U.S. citizenship. Biden is considering an announcement as early as next Tuesday. On that day, the White House is planning to celebrate the anniversary of the Obama-era program known as DACA. That program provided deportation reprieves and work permits to hundreds of thousands of migrants who were brought to the U.S. illegally as minors. In Washington, Steve Potusk, Bloomberg Daybreak.
Okay, Steve, thanks. Well, President Biden's presumptive opponent, former President Donald Trump, is making a big promise to the business community. He says he's going to cut the corporate tax rate to 20%. Bloomberg's Ed Baxter has that story.
This is a pitch to corporate CEOs, about 100 of them, as well as House Republicans. He said a cut from 21 to 20%. He says it'd be offset by future tariffs. And even a small reduction, of course, means billions of dollars for profitable companies. He also vowed to make permanent the sweeping 2017 tax law. As for the GOP itself, his theme?
We have great unity. We have great common sense. A lot of very smart people in this room and a lot of people that love our country.
Also promised to again slash regulations put on business. Ed Baxter, Bloomberg Radio.
Turning to the markets now, the S&P 500 coming off a fourth consecutive record close this week. In fact, the index reached its 29th record of the year on bets the Federal Reserve will cut interest rates before the year is out. Stuart Kaiser is head of U.S. equity trading strategy at Citi. He tells Bloomberg he's bullish on equities for the foreseeable future.
You have an economy that, for now, is holding in solidly. Yep. You've got double-digit EPS growth, and I think those two things, generally speaking, you'd want high, or you would expect higher equity markets in that environment. And I think that's just sort of the situation we're in. I mean, our base case view is higher until and unless the labor market really comes under significant pressure.
The Citi's Stuart Kaiser believes this week's CPI reading, combined with last week's strong jobs figure, will ease fears of a recession, even with higher for longer rates.
Speaking of higher, Lisa, let's talk about Apple. That stock just registered its biggest 3-day advance since August of 2020. The 3-day jump of about 11% added almost $324 billion to the iPhone maker's market value. That is more than all but a handful of components in the S&P 500. And Apple is now back above Microsoft as the world's most valuable company.
And tech will once again be in focus today, Nathan. Adobe shares are up 14% in early trading. After the bell, Adobe raised its annual profit outlook and projected strong future sales for its creative products. We get details from Bloomberg's Charlie Pellet.
It suggests its customers are adopting the company's new artificial intelligence-based tools. Adobe said profit excluding some items will be as much as $18.20 a share in the fiscal year, ending in January. Analysts on average estimated $18.02. CFO Dan Dern says the company expects an acceleration in new creative business through the rest of the fiscal year. In New York, Charlie Pellet, Bloomberg Radio.
Thank you, Charlie. Sticking with company news, Tesla shareholders have backed 2 resolutions sought by CEO Elon Musk. More on that from Bloomberg's Doug Krisner.
The shareholders voted in favor of CEO Elon Musk's pay package. They also approved moving Tesla's state of incorporation to Texas from Delaware. Here's the thing. The pay vote is only advisory. It doesn't guarantee Musk will get his comp. He negotiated a package in 2018 and became eligible for stock options if Tesla hit certain milestones. He succeeded, but back in January, a Delaware judge nullified the plan. The current value is more than $48 billion. Tesla is expected to appeal. If it fails, moving the legal home to Texas would allow the board to revive the package in a new state with potentially more favorable courts. In New York, I'm Doug Krisner, Bloomberg Radio.
Thank you, Doug. Turning to Asia, the yen is slumping against the dollar after the Bank of Japan delayed a decision on its bond buying plan. We get the details from Bloomberg Daybreak Asia anchor Brian Curtis in Hong Kong.
The Bank of Japan has decided to reduce its bond purchases, but it has left the market guessing as to the amount. It will not specify amounts until the next meeting in July. The decision led to selling of the yen as investors were primed for details at this meeting. The BOJ stood pat on other policies. It kept the overnight call rate between 0 and 0.1%. The Nikkei posted modest gains. Brian Curtis, Bloomberg Radio.
Okay, Brian, thank you. One more corporate note back in this country. A federal judge in Brooklyn is indicating she is likely to reject a $30 billion settlement between Visa, Mastercard, and retailers to cap credit card swipe fees. And retailers have fought for decades to slash their share of the cost for accepting card payments, also known as interchange fees. The deal was announced in March. It would let merchants charge consumers more for transactions involving Visa or Mastercard.
Time now for a look at some of the other stories making news in New York and around the world. For that, we're joined by Bloomberg's Michael Barr. Good morning, Michael.
Good morning, Lisa. Still no deal. The U.S. State Department is encouraging Hamas to stop haggling on a proposed ceasefire hostage deal with Israel. State Department spokesman Matthew Miller would not go into details on the sticking points, but dismissed the idea that Hamas should need assurances for a lasting peace.
We were disappointed both that it took so long to get a response and that the response had a number of changes that could drag the negotiations out further.
Meanwhile, the U.S.-built pier to bring food to Gaza is facing one of its most serious challenges yet. The United Nations is deciding if it can keep safely delivering supplies from the U.S. sea route to starving Palestinians. The UN has paused its work with the pier since June 8th. That's when an operation by Israeli security forces rescued 4 Israeli hostages and killed more than 270 Palestinians. The U.S. and Israel say no part of the pier was used in the raid, but an Israeli helicopter used a spot near the pier. The UN and aid groups say they fear relief workers cooperating with the pier are being seen as aligned with Israel and becoming targets. The pier has also been subjected to repairs because of rough seas. The NYPD continues to search for protesters who caused disruption on a subway train. It comes amid vandalism during several pro-Palestinian demonstrations in New York this week. State lawmakers are now looking to ban protesters from covering their face during demonstrations. At the G-7 summit in Italy, President Biden was asked about his son Hunter Biden's recent gun conviction.
I'm extremely proud of my son Hunter. He has overcome an addiction. He's one of the brightest, most decent men I know, and I am satisfied that I'm not going to do anything. I said I'd abide by the jury decision, and I will do that, and I will not pardon him.
When asked if he would commute his son's sentence to reduce it, the president replied, no. Forecasters have warned Floridians to prepare for additional flash flooding after a tropical disturbance dumped as much as 20 inches of rainfall in the southern parts of the state earlier this week. This resident in Hollandale Beach says his home is okay, but his car is underwater.
It was just coming up to the house. We were on high ground, but the other houses are just destroyed around here.
Conditions are expected to worsen today. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg Lisa.
Thank you, Michael. Time now for a Bloomberg Sports Update. For that, we bring in Dan Schwartzman.
Good morning, Nathan. Rory McIlroy finishing his last 3 holes with 2 birdies to tie Patrick Cantlay atop the leaderboard at 5 under par after the first round of the U.S. Open at Pinehurst, North Carolina. Rory talked about the final holes of his round.
And I was just on this on this run of hitting it to 20 feet and two putting. I actually had a good two putt on 15. But I just felt like my patience, I could have got a little impatient, but I felt like my patience was rewarded there with, birdies, in two of the last three holes. So, it was really nice to finish like that. And, as I said, a nice bit of momentum going into the morning run.
That's courtesy of ESPN.com. Meanwhile, rough round for Tiger Woods as he finishes 4 over par. Tiger will be teeing off a little after 1:14 this afternoon. In Major League Baseball, the Yankees can't finish off a sweep of the Royals as Kansas City wins it on a walk-off 2-run double off Clay Holmes. Coming up tonight, the Yankees are on the road in Boston to open up a 3-game weekend set. Luis Gil on the hill for the Yankees, Brian Bello for the Red Sox. The Mets, meanwhile, they win on a walk-off from J.D. Martinez.
And J.D. rockets one out to right center. Back in the gap goes Chisholm looking up, and it's out of here! J.D. Martinez wins it with a 2-run opposite field home run!
That's courtesy of Mets.com. The Mets knocking off the Marlins 3-2. Mets are home for the San Diego Padres as they open up the first game of a 3-game set. On the mound for the Mets is Sean Manaea, with Matt Waldron taking the mound for the Padres. In the Stanley Cup Final, the Florida Panthers now 1 win away from sweeping the series as they win in Edmonton over the Oilers 4-3. Game number 4 comes on Saturday north of the border. Finally, in the NFL, the Jacksonville Jaguars and quarterback Trevor Lawrence have agreed to a massive 5-year, $275 million contract extension that includes $200 million guaranteed and $142 million at signing. That's your Bloomberg Sports Update. I'm Dan Schwartzman, Nathan and Lisa.
Coast to coast on Bloomberg Radio, nationwide on Sirius XM, and around the world on Bloomberg.com and the Bloomberg Business app. This is Bloomberg Daybreak.
Good morning, I'm Nathan Hager, and the bulls just keep on running. The S&P 500 has notched all-time highs every day this week, actually, even with the Fed dialing back its own rate cut expectations. These new signs of disinflation that we saw this week seem to have the market making bets of its own. So let's get more on what is happening in this market. For that, we are joined by Gina Martin-Adams this morning, the Chief Equity Strategist at Bloomberg Intelligence. Gina, good morning. Thanks so much for being with us. Can this rally sustain?
I think that what was interesting is coming out of the earnings season, we sort of lost a little bit of momentum on equities as earnings seasons, especially this year, have proven to be big catalysts for optimism, given low expectations that companies were able to beat pretty easily. After earnings season, you generally do see some deterioration in price momentum in the S&P 500 emerge, but fortunately, the economic data has come in to kind of save the day, especially over the course of the last few days. The easing in inflation, in particular, the continued positive spread between CPI and PPI, but generally the downward trajectory of inflation has helped ease some concerns. At the same time, economic expectations are relatively stable, and that's creating a pretty good backdrop for risk taking for the index.
Well, is there a risk, though, Gina, that the market could be getting a little overexcited about this disinflation? I mean, it is, 1 month's data, right?
Yeah, there always is a risk, but we have had persistence in disinflation really since the beginning of 2023. It paused somewhat earlier this year, but the fact that we have had general persistence in the disinflationary trend since the end of 2022, early 2023, I think is the bigger story that we need to keep in mind. And we do find, in particular, you want to look at the details of inflation. So I understand that the market is somewhat captivated right now by what's happening with CPI, but probably what's even more important for stock prices at large is how the interplay between CPI and PPI, or consumer prices and producer prices, plays out. This is a proxy for margins on the S&P 500, and as long as consumer prices are rising faster than producer prices, and as long as producer prices are not rising too quickly, generally rising below a pace of 3% year over year, we tend to see margins continue to rise on the S&P 500. This is particularly consequential in an environment where, economic uncertainty is still somewhat high given higher interest rates. If company margins continue to inflate because of the broader inflation backdrop, generally that's pretty good news for earnings growth, which tends to power stock prices.
Well, with the betting that this trend in the economic data could continue, we've seen a lot of attention as well on the tech stocks really being a beneficiary of where the rate environment is right now. Do you see that continuing, tech leading the way, or can other sectors start to benefit?
Yeah, I think that actually the reason tech has led the way is not necessarily because of interest rates, but really because of what's going on in the earnings. Tech companies have powered significantly faster earnings growth than the rest of the market over the course of the last several quarters, really leading the way in a cycle recovery that started about this time last year. And what we should see over the second half of this year and into 2025 is the emergence of growth in some of the rest of the S&P 500, which may, of course, spark risk tolerance and interest and investment in those segments of the index. That's really been lacking over the course of the last several quarters. We've had double-digit and even greater than 20% declines in earnings growth year over year for several sectors, including energy, materials, and healthcare on the S&P 500. That has really created a strong divergence in investor risk appetite for sector level investing. It's favored tech and disfavored several other segments, obviously. But as we move into the second half of the year and into 2025, that divergence should close. We should see almost every sector on the index start to post EPS growth over the course of the next quarter in the July reporting season. And then by the October reporting season, every sector in the index is expected to post year-over-year earnings growth. By early 2025, tech earnings growth should be equivalent to, or roughly equivalent to, ex-tech earnings growth on the S&P 500, which should create some very different trends on the index at large.
This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed by 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Lisa Mateo. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.